This is the weekly market analysis from June 6th to June 12th, 2026. In this video, we'll cover the S&P 500, gold, euro, dollar index, and Bitcoin. Let's start with the S&P 500 on the weekly time frame. As you can see on the chart, a five-wave move appears to be complete. Momentum also reached the overbought zone. As we mentioned last week, we were expecting a correction this week, and that is exactly what happened. Price closed with a bearish engulfing candle below the previous two weekly candles. Now let's move to the daily chart. Last week we said we would not enter a short position unless price closed below the May 26th close, around 7,521. That happened on Friday. Now, the targets for this correction, which should last at least 2 to 3 weeks, are the 50% and 61.8% Fibonacci retracement levels measured from the March 30th low to last Tuesday's high. You can see those price levels on the chart. Now let's move to gold on the weekly time frame. Based on last week's analysis, we were expecting gold to move lower this week. Clearly, gold has entered a corrective wave. In my view, this is not a major bearish reversal, but a correction within the bigger structure. The downside targets at $3,884 and $3,611 are not out of reach. Now let's move to the daily time frame. As you can see, if we draw a Fibonacci extension from the top of wave B, we get these projected price levels. In my opinion, the temporary target for this decline is around $4,139. From there, I expect a rebound toward the $4,500 area, and after that, another decline toward the low of wave A. Now let's move to the euro on the weekly time frame. But before that, we need to look at the DXY chart on the weekly time frame. After the decline in the dollar index, this current move looks like an upward corrective move in the form of an ABC correction. Right now, it looks like we are in wave C, and the targets are shown clearly on the chart. For any trade that includes the US dollar on one side, I think it is better to wait until this corrective wave is complete. For the euro, I think a pullback toward the previous high around 1.1247 is not unlikely. Now let's move to Bitcoin on the weekly time frame. In last week's analysis, we said that Bitcoin was likely to move lower this week. This is how I see the wave count on Bitcoin. The move we are currently in looks like wave 3 of the decline. That is why the drop has been so aggressive. I see the target for this wave around the $40,000 area. Now let's move to the daily time frame, where the structure is clearer. On the daily chart, it looks like we are currently in wave 3 of wave 3. From around this area, I expect Bitcoin to have a short-term rebound for a few days, possibly retracing around half of the recent decline. If you bought during the previous week, I think this rebound could be the best opportunity to exit the market. Wherever the short-term low is formed, we can measure the Fibonacci retracement from the start of the decline, which was around $84,000. In my view, the 50% Fibonacci retracement of that move can be used as a potential exit area. I want to emphasize this clearly. If Bitcoin moves up this week, I do not see it as the start of a new bullish trend. I see it as the best opportunity to escape the market. Good luck, and I hope you have a profitable week until next Saturday.